Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about Nvidia as a earnings in review. They announced earnings today and smashed expectations left, right, and center, which leads me to be somewhat surprised by their trading down post-market. As you can see right here on the screen, they're down about 3%, although I think that this presents a great buying opportunity. One of the reasons why I think that they are down today is because the broader market really sold off here at the end of the day. And I think that that is just in line with some additional COVID announcements, some of the information that we are seeing associated with the kind of back and forth associated with lockdowns. And due to that, you can see that if we look kind of what we have here on the screen, we had this sell-off going into the end of the day. And really, Nvidia throughout the day was holding up, and they didn't really have that decline until after hours. So again, kind of following the broader market. So what does that mean for Nvidia going forward? So I think that this is a great time to enter the stock because we're basically getting a free earnings play. So the past 8 earnings, Nvidia has generally speaking moved anywhere from 3 to 7%. And as you can see, they had that move here with a 3% down. Again, that's at the time of filming this, which is just after hours after their announcements. However, I just want to run through a few of the numbers that you can see here below, basically in comparison kind of with what we were expecting. So those Q4 sales was actually 4.8 billion compared to 4.42 billion in estimates. The reason I want to highlight that is because that's not a small number difference. That's $400 million beat, and that's just on the top line revenue. I think it's important to note that that's such a huge beat on the top line revenue because this is a company that is averaging 65% on the gross margin. So the gross margin is just their expected profit when it's just taken down cost of goods sold, although that doesn't have all those fixed costs. That eats into it a little bit. But that is a huge beat there because all of that goes straight to the bottom line. And you can see that here where, again, the EPS estimates, it came in at 291, which is a very healthy beat against that 257. So very impressive. Again, these are some monster numbers that they were coming in with. So one of the reasons why I like this then is if we look at some of the growth prospects, and we don't have it here on TD Ameritrade, but if we just look at some of the growth prospects, let me just go ahead and read you some of these numbers. They had a 1.9 billion sales associated with the data center, and a lot of that is coming from their acquisition of Mellanox, which closed in Q1 of this year, which is one of the contributors of growth. So generally speaking, Nvidia has largely been gaming, and we are seeing some huge increases in the data center side as well, which makes sense because more people are utilizing that. One other growth prospect we've seen is that gaming market was up 37% from last year. So this is two sections where we just had a 162% increase in data center revenue. We had a 37% increase in gaming, and we've also got a 25% increase from last year associated with the graphics segment. Now, the other piece that I would highlight is we're still up 146% from a year ago in the computing segment. So if we are looking at just revenue, they're up 57% year over year. And again, we're not necessarily going to see that in the fundamentals because they don't necessarily update this on a year by year basis. But we're looking at, if we just look at the annual, right now we're targeting a 60% year over year on total revenue. So we haven't had this 2020 number completed yet. So this is getting ready to get blown out of the water, which I think is huge for the stock. So I have all this bullish expectation, and we basically were down 3% on the overall stock after hours. So I think that this is something that this is a good entry point for the stock of that 520, especially because there's already plenty of price targets associated with the company around the $600 mark, 580 mark. So this is a company that has hit those 2 points twice. So not on the, or even on the 3 month, we can look at it here. On both of these days, the stock did touch 600. It actually went higher than that right here in earlier this November. So that being said, there's a lot of bullish sentiment associated with the stock. And I think that we have a free earnings play here. This is one of the reasons why on my watch list, I said I was going to be looking to buy the shares, and that's the move I ended up doing, although I only got a single share. So right now we're basically at break even. I think I may be down $5 or $6, but I think there's a lot of potential to enter into more shares here because the stock is one that I am very bullish on, and this is a company that has a lot going for it, a lot of growth. And if the stock's down on earnings, I think that means you get a free earnings play where it trades down, and we can hopefully see some of this write up right here. So that's what I'm looking for. Again, a lot of bullish sentiment. If you have any questions, drop those down below. And if you found this content helpful, please leave a like and subscribe. Thanks, everyone. Talk to you later. Bye.